All right, thank you so much for taking the time to look at the employee retention credit information today. There is a lot going on here in first quarter, and obviously a lot of questions left to be unanswered from the IRS that have not been answered from the IRS. I think it's very important as we look at this employee retention credit that all people know that it's something that you should very much still confirm with your CPA, still confirm with your trusted advisor. We're working in these times of COVID, specifically with these stimulus packages, we're working with a limited amount of data from the IRS, certainly less than we're used to having. So it leaves some things up to interpretation. So I'll present this and how we see it, and hopefully that's helpful. Hopefully our clients can take advantage of this employee retention credit. But again, please confirm with your CPA or your trusted advisor. With that, all right, the employee retention credit in 2021, initially it was extended. It was initially part of the CARES Act. I won't get into this too much. And you couldn't participate if you got a PPP loan last year. Well, as part of the Consolidated Appropriations Act, signed very late last year by President Trump, it was opened up and extended through first and second quarter of 2021, and the amount that you could get was adjusted a little bit. And you could also participate in the employee retention credit. And last year in 2020, the amount stayed the same and the revenue tests stayed the same for eligibility last year. If anyone wants to dive in on that, I'm very much focused here on 2021, but if we have any questions on 2020 specifically, if we could kind of hold off until the end on that, and I'd be happy to address anyone's questions there. It was then extended when President Biden signed the American Rescue Plan Act in early March to include third and fourth quarters. For the most part, the credit stayed the same. It was just extended. There are a few things that we will touch on here later that were changed with it. But again, those changes are specific to third and fourth quarter of 2021. What does not change throughout 2020 is the amount of credit. So by participating in this credit, it's a fully refundable payroll tax credit for 70% of employee wages up to $10,000 per employee per quarter. That's a max credit of $7,000 per employee per quarter. The word credit is somewhat misleading here. A lot of our clients have been thinking that it's a credit that you slowly dip into over time, but it's actually that credit is applied to the 941, the quarterly 941, the federal income tax return that we file on your behalf each quarter. And that credit lowers your tax liability. And thus, any tax deposits you've made throughout the normal scope of things, the normal course of payroll, are then overpaid, and they refund the tax back to you. What we're seeing for amendments from 2020 is that has to be done in paper, and those are taking some time, but we do anticipate here in first quarter for anyone that's eligible here in first quarter to get this credit, we can process it electronically the first time, and hopefully those checks start coming out in a couple of weeks. I would very much anticipate some of those checks starting to hit in May. And again, the dollar amount does get pretty high pretty quick when you're talking about 70% of employee wages per quarter. Employers can also factor in the cost of employer-sponsored healthcare coverage into that credit. But again, the maximum still sits in place at $7,000 per employee. Eligible businesses, and I'll dig into this a bit more. There are two qualifications to be eligible for the employee retention credit. One is have business operations be fully or partially suspended during a calendar quarter. I'm sorry, I've got the old 2020 here, but the rules are the same by official government mandate. Basically, your business was either partially or fully shut down because of a government mandate. I'll get into the exact detail that the IRS provides as to what exactly that means. That part of eligibility specifically leaves a lot up for interpretation. So again, talk with your CPA, talk with your attorney, your trusted advisor to make sure it's applicable to you, if so. The second and probably more popular eligibility test is experiencing a significant decline in gross receipts. That's a decline in revenue, defined as greater than 20% to any given quarter compared to the same quarter in 2019. So if your business, according to the law as it sits now, and this is our interpretation, if your business is down 20% in gross receipts in first quarter of 2021 compared to first quarter of 2019, then you would be eligible to receive this credit. This credit cannot be calculated on other COVID stimulus packages, COVID sick pay, FFCRA, COVID sick pay time, if that's applicable, would not factor in to those wages because you're already getting credit from the IRS for those. And also any dollars used for PPP loan forgiveness would not factor in. I'll touch on these again in a bit more here, but I think the important part about eligibility is if you've experienced, again, in first quarter of 2021, a decline of more than 20%, so your revenue is less than 80% of what it was in first quarter of 2019, you may be eligible. To get into more detail on that significant decline in gross receipts, again, a decline in gross receipts in calendar quarter 2021, gross receipts on that calendar quarter are less than 80% of the gross receipts in the same calendar quarter in 2019. Again, first quarter 2021 to first quarter of 2019. Employers may elect in a manner provided in future IRS guidance that we have not gotten yet. So this is especially dicey, in my opinion, to measure the decline in gross receipts using the immediately preceding calendar quarter compared to the same calendar quarter in 2019. This would indicate if your revenue in fourth quarter of 2020 was less than 80%, again, a 20% decline, compared to fourth quarter of 2019, you may be eligible here in first quarter of 2021. However, they explicitly state they're going to get into more detail on this with future IRS guidance, and we have not yet received that guidance. Talk to your CPA, talk to your attorney, make sure you feel comfortable with anything that we file on your behalf. The important thing is to note here, certainly if we catch the employee retention credit on your initial filing, you're much more likely to receive a refund timely and in quick manner because it's an electronic filing. But we can amend these returns for up to 3 years from the original filing, and you can get credit later. So something to weigh. It's not do it now or lose out. It's very much something that you want to approach carefully and make sure it's applicable to your business. The full or partial business shutdown. Again, I can email out the slides to this so we can go over this. So you can go over this in great detail. I won't go in too much detail about this, but basically orders in writing, and it can be federal, state, or local government indicating that you cannot operate your business either at all, you're officially shut down, or partially shut down. And it's very important that you document this, very important that, again, you have it in writing. If the mayor says something on TV that this restaurant, you should only be operating at 50% capacity, to their definition, that would not qualify because it's not in writing. You can't justify it. They've also extended the look back time that they'll look at these from the normal 3 years to 5 years because they're very much intending on getting this detail at a later date when the IRS has the resources to dig into it. So I do think either if you are going to say that your business is eligible based on the revenue test or based on the shutdown test, you have your ducks in a row, because I can very much see the IRS issuing out a general request for information as to how you found that your business was eligible. So I think it's very important. And with the revenue test, to me, that would be pretty simple. From your accounting software, you produce your revenues from 2019, first quarter 2019, compare that to what's on the books for 2021. Seems pretty cut and dry to me. But it's important that all of this is documented because I do anticipate the IRS at some point asking how you came up with eligibility. Eligible wages for the employee retention credit. I won't hit too much on any businesses with greater than 500 FTEs, full-time equivalents, it's FTE stands for. businesses with greater than 500 employees could only use the credit to pay employees to not work if they're in a government shutdown. Basically, their business is completely shut down, but they choose to pay their employees only for that time frame that they were shut down. Those wages only would be subject, again, less than 500 employees. It's really during any point in the quarter that you are faced with a full or partial government shutdown. The only caveat to that is they've established, as part of the American Rescue Plan, any severely financially distressed business that's dropped more than 90% compared to the same quarter in 2019, and again, has greater than 500 employees. I hesitate to get into this too much if this isn't applicable to your business. Not something you need to worry about, only if you have over 500 employees. Then you could get it for the entire quarter, but just something of note there. What we do see a lot of questions on from our clients, and something that I really want to hit on in this webinar, is who's eligible. What wages are eligible to your average small business less than 500 employees. It explicitly states that self-employed individuals are not eligible. My interpretation of that is anyone paying self-employment tax, and they get into it a little bit more here. Also, ownership and family members of owners would not be eligible. However, it is very much anyone any person that bears a relationship described above, right here, with an individual owning directly or indirectly more than 50% of the corporation, or 50% of an LLC taxed as a partnership or sole proprietorship. Any child, descendant of a child, brother, sister, stepbrother, father or mother, ancestor, stepmother, stepfather, niece, nephew, aunt or uncle, son-in-law, daughter-in-law, father-in-law, mother-in-law, brother-in-law, or sister-in-law. If anyone that fits this criteria is related to more than a 50% owner, their wages would not be eligible. Very common question that we're getting is, well, I own 50% of the business. My partner owns 50% of the business. Are our wages eligible? And again, I would encourage you to discuss with your CPA for clarification. My interpretation of it is that yes, those are eligible, because it explicitly states more than 50% owners. So if you've got two 50% owners and children of each of the owners, all those wages could very much be eligible, because that's how it's outlined. We are still waiting on further guidance. Also, spouse is conspicuously left off of this list. So there's, again, just areas for interpretation. Make sure you feel comfortable with whatever we file on your behalf, because ultimately you might have to justify it to the IRS if they come back later. We get a lot of questions on that. Any questions right now? Feel free to chime in or through the chat.
Is this Ryan?
Again, any greater than 50% owners' wages would be ineligible, or anyone that fits this list of related to a greater than 50% owners' wages would not be eligible. Okay, moving on here. As I mentioned, on March 11th, President Biden signed the American Rescue Plan Act. This gets into the extension of the employee retention credit into third and fourth quarter of this year. Also established is two new business categories. One is a severely financially distressed business that I mentioned earlier. That's a greater than 500 employees. That would be down more than 90% in revenue, could take part. Not too applicable, I don't think, to anyone on the webinar today, but what might be is a recovery startup business. That if the recovery startup business is a business that began after February 15th of 2020 and has no more than $1 million in average annual gross receipts over the past 3 years, could take part in this credit as well. They will very much be doing the aggregation rules, basically to eliminate people from starting a new business where the ownership is the same. If the ownership's the same, they're very likely they could come back and say, well, you just started a new business to take advantage of this credit because your revenues weren't down. They're going to try and sniff that out. So certainly something that you don't want to go into haphazardly. However, if you are a new business established after February 15th of last year, you can participate in this credit if you don't meet the revenue test or the full or partial closure test. And as I mentioned, the ARPA also extends the statute of limitations from when the IRS may question you on this filing has been raised from 3 to 5 years. They're giving themselves more time to come back to you and assess whether your business was eligible or not. I do see a question here, might be a dumb question, but are part-time employees eligible for the credit? Absolutely they are, not a dumb question. Part-time employees are definitely eligible for the credit. All normal wages are eligible. They even include vacation salary or vacation holiday bonus, as long as it is inside your normal ramifications of pay. If all of a sudden you started paying huge bonuses to everyone, they very, very well may question that. But if you could justify, well, this is a quarterly bonus that I pay out every quarter going back the past few years, then you might very well be fine there. But yes, all wages paid, assuming they're not an owner or related to a greater than 50% owner, all wages would be eligible if your business is eligible. And again, certainly the partial closure could be applicable to many gyms, restaurants. If you're only able to operate at a 50% capacity, to me, that's partial closure. And you should very much take part in the credit. But the revenue test is extremely clear to me as well. If you're down 20%, you are eligible. I am getting a question about the IRS Form 7200. Yes, we are familiar. We can also file that on your behalf if anyone would like us to. The Form 7200 is an advance payment of this credit. Right now, we're finishing up Q1, and some clients, we have a charge to file the 7200. I believe it's $150, and that would be a form that we would fill out and fax directly to the IRS, and that would expedite how quickly you would get this credit. Now that we're at the end of first quarter, I think you're kind of splitting hairs because the filing will be done electronically. I do think that credit will be processed pretty quick, just as quick as under the 7200, but we are familiar with that. And I don't know that I reference it specifically, but that's an excellent question. Do we evaluate our qualification every quarter? Yes. Yes, you do. And Angie in my office is chiming in too. For restaurant, tips are not eligible. It's an excellent point, Angie. I'm sorry I didn't mention that at all. So good questions, good input, Angie. Thank you. All right. So kind of in summary, in 2021, I've got some detail here on 2020. If anyone wants to talk about that, don't hesitate to ask the questions. For 2021, again, it's 70% of employee wages up to $10,000 per employee per quarter. Thank you, Angie. Tips are excluded. It's important to note that, and it's kind of a pass-through, so it makes sense that those tips would be excluded from that calculation because the business isn't necessarily paying those out. It's just kind of the pass-through. But 70% of employee wages up to $10,000 per employee per quarter. It is now eligible for the entire year. And again, must be fully or partially shut down by government order, or must be down 20% in gross receipts compared to the same quarter in 2019. This is a huge credit. You know, if you've got 5 people each making $40,000 a year, so essentially $10,000 a quarter, that would be, and you could justify full or partial government shutdown or drop in revenue of greater than 20%, you could be getting a credit of $35,000 per quarter in 2021. So certainly real money, certainly something that should be thought through and worked with your CPA to make sure they're comfortable with everything. What backup do we need to provide? Question coming in here. What backup do we need to provide to illustrate the 20% reduction in revenue? Internal financial statements. they haven't released that guidance. Unfortunately, we are still waiting for that from the IRS. I would assume internal financial statements would be fine. I would also assume that they would need to be signed by either the owner or an outside CPA firm, but they just have not gotten us that information. So a lot of assumptions there, I'm sorry, but we just don't have it yet. But I would think it would be pretty clear, cut and dry if those financial statements are internal and you could provide those. That would quickly indicate a drop in 20%. Another question here. So we can still have you amend for any quarters in 2020 as well? Absolutely. Absolutely. We can amend still 2020. We have up to 3 years from the initial amendment. What qualifies as revenue for a nonprofit? That actually, I might have to reach out to you directly, Mary Ellen, because I would assume, well, I don't want to assume on this call. I might have to reach out to you directly on the nonprofit specifically. Another question here, does any quarter qualify in 2019 versus 2020 or only first quarter 2021 versus first quarter of 2019? They do explicitly state that you got to compare it to the same quarter. So first quarter of 2021 should be compared to the first quarter of 2019. I mentioned earlier that you can also use the preceding quarter, and that is confusing. We are still waiting on guidance from that, but from their verbiage, it seems like it would be for first quarter here in 2021, you'd be comparing fourth quarter of 2020 to fourth quarter of 2019 to show eligibility in first quarter of 2021. That is very confusing. And it does explicitly state that they will release further guidance on that, which we do not have. So it seems, in my opinion, a little premature to start looking at previous quarters. For me, it's very cut and dry that if your first quarter 2021 is less than 20% of first quarter 2019, you are eligible. Or again, partial or full government shutdown, which I think applies to a lot of gyms, a lot of restaurants. Certainly depends on your state laws and where you're at, but something to look at if your revenues are not down that much. Can we review example of last item in the 2020 column? Yeah, 2020, certainly Delvin. 2020, the revenue test, again, full or partial shutdown has not changed from 2020 to 2021. You've got to have it in writing. It's got to have more than nominal effect on your business. And it's kind of vague, but it's consistent from 2020 to 2021. In 2020, for the revenue test alone, again, if you're partially shut down, and again, if you own a gym and all of last year, you were mandated that you could hold no more than 50% your normal capacity, to me, that's a partial government shutdown. You don't even need to look at the revenue test. But if you do not have a full or a partial government shutdown last year, the revenue test is a little different. That's one of the big changes that have been made from 2020 to 2021. In 2020, revenues must be down 50% in a given quarter compared to the same quarter in 2019, and then not back up above 80% in subsequent quarters. I can tell you I had to read this about 15 times before I understood it. So it is very confusing. But as an example, if your revenue was down 50% in second quarter when the pandemic first hit, compared to second quarter of 19, you were down over 50%. Second quarter, all of second quarter is eligible. Third quarter is also eligible. Even if you did go back up above 80%, it doesn't end until the end of the subsequent quarter where you go over 80%. So second quarter was down, an example would be second quarter is down 60%. Second quarter is eligible. Third quarter, you're only down 15%. That means wages paid in second and third quarter would be eligible. Now, if second quarter was down 60%, third quarter was down 22%, again, over that 20% threshold. And then fourth quarter, you're only down 5%. You are eligible second, third, and fourth quarter based on that revenue test. But you have to have that initial quarter where you were down over 50% for the revenue test. Question, if you received PPP in 2021, took the 24 weeks forgiveness, are you only eligible for the other 20 weeks, 8 weeks of the year? My math is not that quick because this was established in March, after March 13th of 2020. So it's not the entire year. It's just a little sliver of first quarter last year. But absolutely, your point is well taken, that if you received a PPP loan, say your business is eligible on either of the tests, second, third, and fourth quarter, you received a PPP loan in the middle of April, and you use that PPP money, use wages, dedicated wages to forgiveness up until the beginning of October. That period of wages would be excluded. And we can help you calculate all this. We have this all in our system. So we would file an amendment for second quarter, perhaps part of first, but that's filed on the second quarter 941, and capture the wages before you got your PPP loan, and then apply for the credit on the wages paid after the PPP loan. Because you cannot use wages dedicated to PPP loan forgiveness for employee retention credit eligibility. Hopefully that works. Since the Form 7200 requires it to be faxed, how would you be possible to verify whether or not you were approved or not? Excellent question, Bob. There's not even verification on the 941. They're not asking for verification of eligibility with these filings. They're pushing money out the door as I see it. So 7200, you're faxing that information, they cut you a check, you've got to justify it after the fact. Same thing with the first quarter 941. We're going to push the 941 with the credit indicated. They're going to send a refund for the credit amount, and later, which is why they extended the statute of limitations, I feel, even though they haven't released guidance on it, later I feel like they're going to be asking, how did you prove eligibility? And if they then deem that you are not eligible, those are federal tax payments that are late. Would they waive those because of the ambiguity of it all? You know, federal tax payment for late payroll tax payment to the IRS is 10% and plus a small amount of interest. So that's your liability there. They might waive it because of, again, the ambiguity and the strife that COVID has created. But if they somehow come back and say, you're not eligible, you owe us this tax, you owe us a 10% penalty, more than likely, again, they might waive it because of COVID, and you owe us interest because that was due a couple of years ago and we would have had that money. So you don't prove eligibility on these initial filings, which seems very backwards, but it's the times that we're in, which makes it even more important, I think, to thoroughly discuss this with your CPA, your trusted advisor, to make sure that they agree with these determinations that you are seeing on your business, that we help you calculate because we have all the data. And we're not licensed to give you the information, to offer advice on this front. We're just presenting all of the information as it appears, and we'll happily help you process this. We want our clients to take advantage if applicable. But again, you need to feel comfortable with it, because I feel as though it's very likely at some point the IRS is going to come back and say, why were you eligible? Hopefully with the revenue test, you're just sending internal financial statements, comparing your 2 quarters, and that's it. But we just don't know. We just don't know at this point. As we've seen with other COVID stimulus packages like the PPP loan, you know, they've basically said under $150,000. We assume that that was taken in good faith. You don't need to justify the financial need. I would not be surprised if this is very similar. If they say, we understand that it was very vague and you took advantage of the credit as you saw it. There might not be any penalties or interest. They might automatically assume that you were eligible under a certain dollar amount. None of this would surprise me. But we just don't have all of the information. I wouldn't let that deter you from taking advantage of the credit if you can, again, claim full or partial shutdown. Or again, the gross revenue drop to me is as cut and dry as you get, and providing financial statements that are accurate and backed up with your tax return seems pretty cut and dry. I would not hesitate to use the credit if applicable. My accountant CPA is one who wanted me to ask you the 72 form because they are so vague. Most CPAs don't. It's so true. And, they keep pushing this legislation out, and the IRS is struggling to keep up. The fact that we don't have further guidance on this and the 941s are due, I would say is astounding, but these are the times that we live in. So it is very vague. It is very payroll specific. So we do know a lot about it, and I feel comfortable about all the information that we're putting out on it. Our normal disclaimers that ultimately even though we do the calculations for it, even like we do on your normal payroll tax return, ultimately your business is liable to make sure that those are accurate. So I don't want to, I scared a couple of clients into not taking advantage. I don't want to do that. I think if your business is eligible, you should absolutely take advantage, but just go in prepared that you might have to justify eligibility at some point, and make sure your CPA is comfortable with everything. Can we get copies of the slides? Absolutely. I'll email copies of the slides. And I'll put the presentation on YouTube so I can email out the video as well. I think I got one more slide here. So what we need to process Q1 of 2021 ERC credits on your behalf. Really, all we need is an email to tax@payoptions.com indicating that you are eligible for first quarter of 2021. We don't even need to know the reasons why. It's not reported on the 941. You should have them in-house, but we don't need to know to process this on your behalf. If you have, some clients have been giving us applicable wages and credit amounts. That's obviously fantastic and helps us expedite the system or expedite that. But not everybody has that or can understand it. We have our system can calculate this on your behalf. So if you'd like us to calculate this credit, what we need is, with that email, indicate if there are any greater than 50% owners on your payroll, so we can exclude those wages, or any relatives, as we established earlier, of a greater than 50% owner on your payroll. So we know to exclude those wages. Secondly, if you got a second PPP loan, we need to know the exact date of that second PPP loan, the date that funded. So we exclude anything after, because presumably, just like the first PPP loan, from the date you got it, now I know the second PPP loan has a little bit more flexibility on what weeks you choose, but to me, it's pretty cut and dry that if you get it in first quarter, if you have gotten it in first quarter, wages immediately after would be used for forgiveness. So if you let us know that you are eligible, and let us know if there are any owners or relatives of owners, again, greater than 50% owners, as we see it, on payroll, we'd exclude those wages. And then if there's a second PPP loan, we'd exclude wages paid after the date that PPP loan funds. Questions? If you are president of your corporation, are your wages excluded if you own more than 50% of the company? Yes, Bob, that is how we see it. If you own more than 50% of the corporation, we see your wages as being excluded. Again, check with your CPA. It's so very vague, and we've had clients disagree, not on that point specifically, but on other points with this. And your business is ultimately liable. So if you feel strongly, or your CPA feels strongly about filing a certain way, we can certainly complete those filings on your behalf. Again, the liability ultimately falls on your business. So we simply process. We're just trying to do this to help our clients out. What if you are family of a 10% owner? As I see it, you would be excluded. Oh, I'm sorry, your wages would be included. If only a 10% owner, if you are a child of a 10% owner, your wages would be eligible, as I interpret this. My last point is, due to the manual nature of this filing, the amount of time that we're spending per client, especially with the calculations, especially drilling down to make sure we have the right information, we are charging $100 to process the first quarter ERC on your behalf. This differs from what we said earlier, and we apologize for that, but the amount of time that each client's, just the manual nature of the filing, the amount of time that we're taking with each client to make sure it's accurate to the best of our knowledge, the best of the client's knowledge, is just taking a lot of time. So we are instituting that fee to process this on your behalf. But if you are applicable, it's pretty straightforward. And you just email us this necessary information and we'd be happy to process on your behalf. We want to see as many eligible clients take advantage of this credit as possible. So we're very much happy to help. That's it for my slides, my presentation. Is there any other questions? Like I said, I'd be happy to email out this presentation, the slides and the video. But any questions that I can answer right now? Seems pretty straightforward. Looking forward to the email. Thank you all so much for taking the time. And I'll see if I have more of the questions specifically as it relates to the ERC. Who would I contact at PayOptions? Tax at PayOptions. They're the go-to. I'll be weighing in on a lot of this myself. I'm helping out as much as I can. But don't hesitate to talk with your payroll specialist. I would very much copy your payroll specialist and email tax with specific questions. We can also be reached in the office, 513-729-8463. My name is Ryan. I've been dealing with a lot of this internally, and I'm happy to help. So hopefully everyone found this valuable. Hopefully everyone that is eligible can take advantage, and we're happy to help. So thanks again so much for taking the time.